Hey, good evening, Mr. Pineapple.
What's going on? How's everybody doing? Welcome to Thursday night with Pineapple. I'm your host, Terrence Ramses. Here, I'm gonna give you a few minutes to get on, get prepped. Got a lot of stuff to talk about tonight. It's gonna be a fun, interactive. We're gonna get some education. Maxwell's still in the background. Give you a few seconds to get on and let my music play just a little bit in light of Reggae Month, Dancehall Month, Black History Month. We're going to have a good time here. Yeah, but I hope everybody was well this month, this week. I hope your week was productive. Man, it's a lot going on, man. Like, listen, but a lot of things going on behind the scenes with RBC. It's been crazy, and it's a lot, man. I'm just excited for what's happening, what's about to happen for this month, and what's going on for the upcoming weeks. We got some events that's coming up. I'm planning on booking the Collard Green Festival tomorrow, so you'll see us out there. Got the new We Are One jackets in, okay? So let's talk about a little bit about the brand updates and news. So the jackets are finally in. So I'm gonna go ahead and show you. Bam! The We Are One jackets are finally in. Got the embroidery right there. The nice yellow hoodie to go with that. Got the diamond patch. The diamonds are who you are. And the One Love patch, okay? So you also got the Royal Blossom Company on the back, nice and embroidered. It said the Royal Blossom Company right there, the red pineapple. So this jacket right now, so we're going to talk about the pricing of this jacket, okay? So we're going to go ahead. I am going to show you the price of this, right? So right now, it was supposed to be $129.99. So we're going to give you 20% off, so you'll be able to get this price. So when you scan this code, okay, it'll take you right to the jackets, okay? So you want to go ahead and get that order in. So there's only about 50 of these jackets left. More than half of them are, almost half of them are sold out. So you might want to get your orders in. We do take Afterpay, so you might want to go ahead and get that in there too. So we also have our socks. Make sure you scan this QR code. It'll take you right to our socks. So you might want to go ahead and get your orders in. 3 for $20, 1 for $10.99. These are going into production next week. So we'll have these by the third week of February. So you want to go ahead and get your orders in for these. I'm telling you, you're going to be excited about this. So I'm going to tell you to go to our website, the Royal Blossom Community, so you can take a look at everything that we have going on. So these QR code right here, Royal Blossom Company, you can go to rightbrandclothing.com and it'll take you to the same URL. So the mission of the brand is to restore, build, create, to restore all the wealth and resources that have been lost in our communities, to build up the youth and children that are coming behind us, to create a unique commonwealth of like-minded entrepreneurs, to put them back in their God-given purpose and talents. Our brand values is to be fun, spirited, and passionate about everything that you do. So without further ado, I am going to show you a quick snippet of a video that is going to touch your soul. It's going to have something that you might want to see. So I'm going to go ahead and play that, show you what we working with this jacket, man.
Hey, good evening, Mr. Pineapple here, out here in Sunnyside, Tampa, Florida. Look, the weather has been cool down here in Tampa, in the Tampa Bay area. Listen, the orders have been going out. My auntie, she has something to say to you about her order. What's auntie today?
Hey, y'all. Look at this. I got my mama jacket. We are one. Hey, check this out. Got my name on it. Got my name on it. Got my name on it. Hey, listen. I love it. I love it. Look, These are the new ones that just came out. And I'm glad I'm one of the first ones. Thank you, nephew.
Love you too. You got your order in, get your order in. www.royalblossomcommunity.com. Get your orders in today. There's only a limited amount of jackets. Once they run out, we're not making it no more. Over and out.
So yeah, man, that was the video real quick. Everybody getting their orders in. Some people got customs, some people don't. But without further ado, so let's go ahead and get into the nuts and bolts of our presentation. So I have the pleasure of knowing this gentleman for a few years now. We have done multiple collaborations with insurance. He's educated me about a lot of different financial aspects in life. Just trying to get my business and everything in order. He's been helping me with that behind the scenes, and he's doing some great things out here in the community. He's out there in the West Palm Beach area, if I'm not mistaken, and he's doing some stuff that's going to possibly change the trajectory of 2025. So, without further ado, I'm going to bring up Mr. Fredrick Santory. What's up, brother? How you doing?
I'm doing well. How's everyone doing out there?
Good, man. How you doing today?
I'm doing great. I'm outside getting some fresh air, but I like I love the video. That's awesome, and those jackets look great. So you said you got about 50
left, my man.
Awesome. Well, everyone better get some of those before they run out.
Yeah. I meant to say the sizing from small to 2X. 2X fit like a 3X. So go ahead. That's it, man. It's limited supply of these.
Awesome. Well, I appreciate you having me on tonight, and I look forward to having a quick conversation about financial strategies and talking a little bit about insurance and how it can help those business owners out there that are listening in, and see if we can educate and help them.
Yes, sir. So tell us a little bit about yourself, where you from, and how long you been in the financial planning industry.
Yeah, so I'm originally from New York. I grew up in the Bronx. I moved down to Florida in middle of high school, and I've been down here ever since. I haven't left. I don't think I'll ever leave the Palm Beach area. I got into finance. I was doing some nonprofit work for many years, but I got into finance through my financial advisor. I wasn't making a lot of money. I was working for, like I said, a nonprofit, and they just simply opened my eyes to some of the things that we're going to talk about tonight on how we can help one another, but also how you can build up generational wealth for yourself and for your family. And so I've been doing this now going on 7 years as a financial advisor. Started off doing more insurance planning. Now I'm doing more comprehensive planning. I'm working with a lot of business owners in the community, trying to educate them on how to level up their own personal wealth, but also how to strategize and leverage their business. And some of the tools that we'll talk about tonight and how you can leverage your business and some of these tools to increase your revenue, increase your ability to bring in money. So there's a lot of different ways and different strategies. I focus a lot on tax efficiency because I know a lot of you out there, when tax season comes around, which is around the corner, it feels like you're paying Uncle Sam every last dollar of profit. So there are some areas that we can help you reduce that liability and utilize that in the future in a tax-free manner.
Okay. So what industries are you in that you help people with their finances?
Yeah, so entrepreneurs, small to medium-sized businesses, start.
Something happened with your sound. Nah. Let me see. Nah. Come in and go back. Yeah, the sound. Nah. Come in and go back. Can you hear me?
I'm back. Can you hear me?
All right, there we go.
I can hear you.
You can hear me?
Okay. I'm not sure what happened. Yes, I can hear you.
I don't know. Go ahead.
Well, yeah, I work with a lot of entrepreneurs, small to medium-sized business owners. restaurant owners, law firms, construction companies, pharmaceuticals, medical device sales. So realtors. So basically any industry, especially for those small to medium-sized businesses that are even sole proprietors, that are looking to build their wealth and use their financial tools to their best ability. Those are the types of people I can help out. But I also work on the the private side of things, personal finance. Even those that have W-2 or they're working for somebody, not for themselves. I can help them budget and also help save for retirement.
Okay, so you in a little bit of all that. So
Everything, yeah.
You in insurance, you in trust, credit cards, financial planning, debt consolidation, all that.
Yeah, I don't personally do the debt consolidation, but I do have a team that handles that. But I know a little bit about it just to help those that are, up to their necks, it feels like, in debt. We have strategies to help, reduce that stress. And once that debt's paid off, we can start focusing on the growth aspect.
Okay. All right. That sounds good, man. That's some good stuff. So you might want to always get somebody to help you with your personal finance and somebody that's going to guide you into the right direction, because there might be certain key components that can be stopping you from getting into the next level too.
Absolutely. And your personal debt does affect your business credit. A lot of people think that, when they open up a business, they start over. You want to have your credit, your business credit, and your personal credit. They kind of get intertwined. And a lot of people start to leverage their business credit to do bigger things, but you got to be personally financially stable before you can do that, because the banks will look at it and go, well, this is a liability or a risk. So I can help with both. And I do have a couple of people that I can introduce you to, to help guide you in that way as well.
Okay. Okay, that sounds good, man. I know you are a broker for multiple different things, but so can you give us a little bit? What is your definition of life insurance?
Yeah. So a lot of the misconception I should start with is that life insurance, it only pays you in death, right? That's why a lot of people it's kind of taboo. They don't like it because it's kind of like putting a jinx on yourself. However, life insurance is a way for you to, one, leave a legacy to your family, right? If you got loved ones, you got people you care about. If something happens to you, my definition of leaving this place better than when I started with is always, my goal. But two, you can use your life insurance while you're alive. And so the way that we do that is, one, we have to be healthy enough to get it, right? It is based off of your life expectancy. Two, we have to be in a position financially that it makes sense, right? But I do believe that every person, whether they have $1 million or nothing, should have some life insurance in place. And that's just for the fact that if something happens to you, you're going to leave your family with tax-free dollars. But life insurance is a tool for business owners specifically. One, it protects their business, right? It protects their family and their business. Two, it's a way to store money long term if you do it correctly. And it's creditor proof and judgment proof. So if you get sued, your business gets sued, it's a way for you to protect your money. And three, it's an asset. So whenever you go to a bank and you ask for a loan, if you don't have life insurance, you're not going to get the best rate, right? If you have some life insurance as a business owner, they're going to look at that and go, oh, that's an asset. It's like a house. It's like a car. It's something that it's a tangible that they can attach themselves to. So it is a tool for those that are looking to build their credit and utilize their credit line.
Okay. How would you go about telling the bank about life insurance, about your policy?
Yeah, so let's just say you and I are in business together. We go, hey, we need a bank loan. And we've been working at this for 10 years, and we have some life insurance in place. Built into the life insurance that I'm talking about, because there's two types. One is term insurance, which everyone knows that if you pass away, you get a death benefit. That has an expiration date. The life insurance I'm talking about is permanent life insurance, and there's a couple facets to that. However, let's just assume that we have already 10 years into this. It's kind of like a house. A house has equity, right? So if you sell your house, you get that money. The life insurance has cash built into it, so it has equity inside it. And so when you go to the bank and go, hey, Mr. Banker, I need $100,000, they're going to look and go, what do you have to collateralize? Well, I can collateralize my car, or I can collateralize the building I own, but maybe that's not enough. Maybe you need another asset. So you can collateralize your life insurance. So let's say you had $100,000 in your life insurance policy, you can go to the bank and I'm asking for $100,000. And so they're going to give me a loan. And let's say the interest rates are at 7% right now. But because I'm collateralizing, I have an asset to put up, in case something happens to me, they're going to give me the loan, not 7%. They're going to give it to me at 6.5%. So it's going to help give me a discount, but it's a way for you to still get money from the bank. And the money that's sitting in the life insurance is still going to grow because you don't technically give that money to the bank. It's there in case you don't show up, right? And so it's a way for your asset to grow in the life insurance. And it's a way for you to get liquidity. And so that's how you would normally go about getting a loan from the bank using your life insurance.
Mm. Mm. And it's the same day?
So it depends, right? Some banks, depending on the paper that you have, depending on the company you have your life insurance with, could be the same day. Some will go through underwriting that could take up to a week. But once it's just like a home, right? If your house is worth $500,000, and let's say you don't owe anything on it, when you go in to get a equity line of credit on your house, it might not necessarily be the same day that you get that line, but you're going to get it within a week or so because they're going to do some underwriting. They're going to see, okay, there's some equity here. They're going to check off that you own the house, right? So you have to prove that. But yeah, essentially, if you plan it correctly, you can get that money in a very timely manner.
Wow. Didn't know that. That's deep.
Yeah. Now, the difference is, right, or I guess the similarity, I should say, is just like when you buy a house, you buy a $500,000 home today, and let's say you did get a mortgage, and you got a mortgage for $450,000 because you only put $50,000 down. Well, it's going to take you some time to pay off that mortgage, right? So you have that little cushion of mortgage to equity, and that's what you're going to be able to borrow is that difference, right? Same thing with the life insurance because it is still life insurance at the end of the day. There is a cost to having it, right? And so when you pay into the life insurance over time, you're paying down that cost internally. And so every dollar eventually that you give that company, they're going to give that back to you in the form of a dividend, and it's going to accrue compounded interest. So at a certain point, let's say at the 10-year mark, you're putting $5,000 away into this policy a year. They're not only going to give you that $5,000 back, they're going to give you interest on top of that. So it could be 15%, 20% interest. It just compounds on itself. And so I have clients that I've had, I've been doing this 7 years. I have clients that are in their 50s and 60s that have had policies with certain companies for many years. And they're sitting on $100,000 to $500,000 of tax-free money that they can borrow from. And all they got to do is call me up, say, hey, I want to borrow some money. Within 3 days, they get their money sent to their bank account. And that's in a tax-free manner. So if you do it early enough, is what I'm getting at. It takes time, but if you do it early enough in your career, your middle of your career, your later years of your career, you can access this money in a great way.
Gotcha. That's interesting. Okay. I have no follow-up question for that. I'm just processing that. So can you give us some backstory of life insurance? How did it come about?
Yeah. So it all goes back to the Roman Empire, right? This is like really far back in our history as humanity, right? So the Roman Empire, they had soldiers, they had wealthy people, right? And what happened was those soldiers that are high-ranking officials, they would pass away, and they would go around and they would collect money from everybody, and they would be considered a gift to the family, right? So it was an honorary kind of distribution to certain people. In the late 1700s, that changed. The church really took it over, and so same thing. The clergy, the higher ups, the bishops. What would happen is when people would pass away, they would collect a fee from the constituents, and they would give it to their family, and that developed. And so when it came to the United States, it evolved from there. But when it came to the United States in the 1800s, you had insurance companies born, and so you could purchase a life certificate, I should say, where it's a contract with the insurance company saying, hey, if I pass away, I'm going to give you money while I'm alive. When I pass away, you're going to give my family X amount. So it became a contract. And so that's how life insurance was born. And it evolved from there as companies like, or not companies, but individuals like the Rockefellers, right? When the Rockefellers started really making money, the assembly line, everybody knows that story. When they started making money, they said, okay, what are we going to do to ensure that this legacy that I've built continues to move on? A lot of people think that, all their money is sitting in a trust account somewhere. No, it's actually, they put their money back into life insurance. And so every Rockefeller, every, and this is very wealthy people, every politician has this, that every member of their family has life insurance. And they may be able to access a trust and they'd be able to draw off that trust. But whenever they pass away in the future, that life insurance policy that's paid for by the trust or paid for by the family is eventually going to go back to the trust. So they replenish. This is how we talk about generational wealth and how we can close that gap from people that are, struggling right now, and maybe they were born into that struggle, to people that weren't born into that struggle. But if you do it correctly, and you get everyone covered in time, right? It's all based off of health and life expectancy. If you get everybody covered, you can actually, within 3 generations, become very wealthy in this country. And that's just by purchasing life insurance on your younger generation. So whenever they start passing away, they're passing away, but their dollars that they're contributing to their family, to the trust, is getting bigger and bigger. And this happens over, like I said, about 3 generations worth. So for me, I'm starting that generation. I have life insurance on myself. All 3 of my boys have life insurance. And eventually when they have kids, I'm going to get life insurance on those kids. And so my family trajectory is going to change in the next 3 generations here. By every person that passes away, starting with me, the trust is going to be born, right? So it starts off with 2 million, 5, whatever it starts off with, $10 million. And then when my boys pass away, $20 million. When their kids pass away, $50 million, right? And so this is how you can build it up. It will take some time. It's not going to happen overnight. But in the long run, if you have this stuff already in place, it makes every person's life, that is younger than you, a lot easier. I'm sure you've dealt with, or at least maybe some of the people in your audience have dealt with somebody that has passed away. It's a very sensitive time, right? People are heated, money corrupts, right? You hear that saying. But I've been in actual funerals where people are passing hats around to pay for the funeral, or to, take care of the mom or the dad that's left, right? So that's a tough situation when, you got people at home not really making rent, right? And so it becomes awkward. Now, if everyone got a life insurance policy for $20, $15, and you paid that throughout your life, whenever you do pass, your family gets $100 grand, $200 grand, $500,000, whatever it is. That makes it a lot easier, right? And then you can actually have what we call a celebration of life, instead of a funeral that we all know is like doom and gloom, right? So, and that's just the way I see it. And I think a lot of advisors see it this way as well. And so that's why it's important to educate people. Now, they don't teach this to you in school, so that, don't worry about going to your math teacher or your psych teacher and going, hey, why don't we teach this? And why don't we learn this? There's a lot of ways to learn this. You can go to the library, you can Google it now, you can talk to an advisor. The reason for that is the people that are at the top, your 1%ers, let's call them, the politicians, the people that make the laws in the country, they use this strategy, and they perfected it. It's actually in the tax code. It's tax code 7702. For those of you that are Google minded, want to check it out. In the tax code, it states that life insurance passes to your beneficiary tax-free. And so what does that mean, really? That means that you're giving somebody money, and they don't have to pay Uncle Sam for it. So it's avoiding probate. It's avoiding all the minutia that comes with a funeral, with a burial, right? You have to split up the properties. You have to split up the accounts, whatever monies that's sitting in the accounts, right? You have to split it up with all the family members. With life insurance, it avoids all that. And that's because you have a contract with the insurance company saying, hey, if I pass away, Terrence is getting some money, right? There's no dispute. There's no court system can overturn that. There's no judge that can go, hey, Terrence, you're a nice guy, but, he's got kids over here, and essentially, it should go to them. No, I bought a policy, and Terrence is my beneficiary. Sorry, there's somebody driving really fast behind me. Terrence is my beneficiary. You're going to get that money. And so this is why having these conversations is important. And it's not really about the death benefit. Yes, that's a huge advantage. It's about securing legacy, right? we're in February, right? We're in Black History Month, and we got Martin Luther King, and we have all these great historians behind us. Just think about how much greater it would be if every person, moving from that generation on, didn't have to struggle financially to make ends meet, right? You could start off in a better position. That doesn't mean necessarily you're going to be, richy rich, but that just means that you can possibly put yourself in a position to build a business quicker or teach your kids about financial literacy because you understand it, right? So there's a lot of reasons why you want to have some of this stuff in place. It just makes everything easier in the future.
Yeah, that makes sense, man. I see so many people. I've seen so many people on Facebook doing that, soliciting GoFundMe's and election plates, and even when they're alive, they are doing that. Taking care of chemo treatments. They just don't got their affairs in order all the way. And these are conversations, especially in the Black community. It's tough conversations. And, mama don't want to have those conversations about leaving nothing behind. You just leave behind your problems, debt, and property undivided, land undivided, and not having all these things in order for the next generation to to prosper and to move forward. It's supposed to get easier, not harder.
Yeah, absolutely. And speaking on that too is, I grew up in a Hispanic household, so we don't naturally talk about our feelings. We don't naturally talk about what's under the mattress as far as money, right? And a lot of people, like my grandfather in Puerto Rico, when he passed, they found monies in the wall, they found money in the ceiling, they had it in the pipes. Like he hid money all over the house, but he never told anybody. So, what good is that if everyone is fighting over the funeral and where's all the money? He put it in the house. So I encourage people, have conversations as awkward as they are. I had this one with my own father, who it was really tough because he didn't want to talk about it. I said, Dad, what do you want to do when you pass away? What's your plan? What's your wishes, right? And a lot of people take for granted that if you tell somebody, hey, I want this to go here, I want this to go there, that they're going to do it. No, get an attorney, get a will in place, get a trust, right? Because when that time comes, that person that you entrusted to do what you asked them to do, when that money hits, everyone acts different. And so you want to be able to say fully that you're like, hey, you're going to be okay, right? This is what's going to happen. You're going to call so and so, they're going to read the will, you're going to get X, they're going to get Y. Nobody's going to fight. Right, so you want to be prepared, and unfortunately, it's a very sensitive issue just because nobody likes to talk about the end. Well, the answer is we're all going to get there, right? And that's why I always lead back to, how do you want to be remembered? How do you want to leave this place? Do you want to leave it better than what you came into it? And my answer is yes, I always do. And so that's why I started having these conversations. My kids are a little young to have these types of conversations, but my plan is, when they become of age, and that could be in 5, 10, 15 years, whatever it is, have a sit down, have a conversation, teach them the value of what things are, right? School's not free, housing's not free, food isn't free, right? So teach them how to budget, teach them how to pay your bills, right? That's a huge thing. Nowadays, people go out into the real world and they don't even know how to pay their phone bill, right? So you want to teach them how all these things, and teach them young, right? So that way that when they get into the real world, it's not a shock to them, and you can feel good about leaving them out there and going, all right, they're going to be okay.
It's true. So tell us a little bit about the different policies that you can get.
Yeah, so there's two types of life insurance in this world. One is term insurance, which I kind of hinted to a little bit earlier. That has an expiration date. Typically, you'll see a 20-year policy, a 30-year policy, a policy to your 80 or 90, but there's an expiration date. And the real reason that there's an expiration date is because you're kind of betting on yourself, and the insurance company is also betting on yourself, on you. Now, they're betting different than what you think. They don't want you to pass away, right? Because that means they're on the hook for $1 million if that's the policy you have. So you're betting against the clock. You're saying that I'm going to pass away before 20 years. I'm going to pass away before 40 years, whatever it is. And they're saying, I bet you're going to outlive that coverage. Because if you outlive the coverage, they win. If you pass away, then your family wins, right? And so that's term insurance. And relatively, I would say it's inexpensive to get because it could be $20, it could be $30, it could be whatever, right? However, over a long period of time, it's actually a waste of money because the insurance companies do a little due diligence and they understand they use actuaries, so they know how many people that are in Terrence's age group, his background, demographic, whatever. They know how many people are going to pass away on a yearly basis. So the chances of you passing away is less than 3% with a term policy. So if you get a policy, if you're accepted for it, the chances are you're not going to pass away naturally, right? In that regard, within that term period. Now, there's also something called permanent insurance, which I kind of talked a little bit about earlier. You're going to pay a little bit more premium, it's a little bit more costly, but that dollar that you're contributing to it over time, eventually you're going to have access to it plus interest. And so you cannot outlive that coverage. So if you live to 120 years old, then great. Whenever you pass away, your family's going to get a death benefit no matter what. And while you're alive, if you want to, if you choose to, you can access your money and use it as collateral. You can leverage it. You can do that. But you're never going to have to worry about when you pass away, is there going to be a death benefit or not? Right. So those are the two types. Okay. And so what I encourage people to do is at least get term insurance, get the coverage in place. There are some companies that are good with converting your term insurance to permanent. The reason that you want to do that is because you want to get it young. You want to get it while you're young and healthy. As you get older, you're not going to get as healthy, right? Everyone knows that, we just started the new year. We're all going to the gym again. We'll be done by March, right? So eventually, health-wise, we're gonna come down. However, we're always getting older. And so what we're doing is we're protecting our insurability. So if you live till 65, 70 years old, they can never take away the policy, and you can convert it to permanent insurance down the road if you wanted to or if you needed to, so that way you don't have that expiration come up on you.
Okay, like what are some of the permanent insurances?
So there's two types of permanent insurances. There's one that's a dividend-based policy, or what we call whole life insurance. This is where you work with an insurance company and you can pick the insurance company. There's a couple of good ones. I would say there's about 5 really decent ones that whole life insurance makes sense for. And then there's a lot of companies out there that talk about whole life insurance, but it's not very good. Nevertheless, this is a bond with the insurance company saying that, okay, if I give you $1 in 5, 10, 15 years from now, once you start paying off that dividend, once you start getting that dividend, you want to work with the top elite companies that are going to pay you a dividend every year, and they're going to pay you the highest dividend every year, because not every dividend is equal, right? So that's based off of the performance of the company. And like I said, there's about 5 good ones out there. I can always connect with people offline to talk about them and show them those policies. Now, there's also something called, and it's going around, there's a lot of different names, but it's in a nutshell, it's called universal life insurance. Universal life insurance is a index or a market-based product. Therefore, it's still life insurance, but your dollar is going to go buy some equities. You're going to buy stock with it. Now, because it's in the life insurance wrapper, think about a brokerage account or any investment account. Whenever you buy stock, well, there's taxes, right? But because it's in life insurance, there's no tax consequences on that year, okay? Because of the tax code, like I mentioned earlier. And so a lot of people are going this route because they can earn 9, 10, 15%, whatever the market earns, right? However, there's a risk to it because the market goes up and down. Not every year the market's positive. And so if you fall within a year when the market's negative, well, your life insurance could be in jeopardy, potentially, right? Not saying it will be. If you do it correctly, it'll never be in jeopardy. However, I'm not a big fan of that type of policy because I think my risk dollars should be in a risky environment and my safe dollars should be in a safe environment. And so I try and separate those two, but sometimes you can't avoid it. People want what they want. I'm here to help them. But I do educate and say, hey, we should always have a little bit of whole life insurance outside the market, and you should have a little bit of universal life policy inside the market so you can utilize both the risk and the reward.
Is there a limit of how many insurance policies you can have?
No, there's not a limit of how many policies you can have per se. There is a limit on how much coverage you can have. So I'll give you the example. If you're making $50,000 a year, it's not like you can go out and get a $50 million policy, right? if you could, the rule of thumb is 10 times or 20 times your income. So if you're making 50,000, you can get 500 to a million without any questions being asked. There are some circumstances where the insurance company will give you a little bit more, but they kind of start asking you for financial statements and they start asking you for more things, and essentially they could say no. But that's really what it comes down to. It's about how much the insurance company's on the hook. They don't care too much about how much you're paying. They care about how much they have to pay if something happened to you.
Okay. Okay. How does life insurance benefit business owners?
So life insurance is an asset, right? Especially on the permanent side of things, whether it's the whole life insurance or the universal life policy, it's an asset. At the end of the day, you can utilize it, like we talked about earlier, as collateral with loans. It's good on the balance sheet, and so people can use it while they're alive. And so business owners should have a little bit of this, especially partners. If you have a partner and you have a partnership agreement, you should have some life insurance to ensure that if something happens to you or your partner, whoever passes away or whatever happens to them, you're going to protect the business, but also protect your family, right? Because in this state, if something happened to you, right, you're the business owner. Let's say your partner passed away. Well, now you're in business with their spouse, right? And that might not necessarily be a good thing. And so the life insurance ensures that you get your business, right, and the family will get their life insurance.
Gotcha. That makes perfect sense. So that, yeah. Okay. My next question is, can terminal people get a big life insurance policy like $1 billion? Why or why not?
So the quick answer to that is no, right? Typically, life insurance is based off of health, right? And insurance companies, once they know you're not healthy, they're not going to insure you. So that's why it's important to get it before you get sick, right? And I've had that many times where someone calls me and goes, "Hey, I want a $10 million policy." And I go, "Well, how's your health?" And they go, "Well, that's the reason I'm calling. I just had a heart attack or I had a stroke." Unfortunately, the insurance company is going to say no right away. And so you want to get it while you're young and healthy. Otherwise, unfortunately, you're not going to be able to get any coverage.
So you just can't. They just can't help you.
They can't, because they know that the risk is too high for them. Remember, they're betting on you. They're betting that you're going to live longer than what they're going to be paying out, right? Because they're taking your money and they're investing it and they're making more money. But they're also going to give you some money for that risk. But essentially, if the risk is too high, they won't be able to take it on.
That makes sense. Here's a good question. A lot of people ask, why don't you get the money back from like a term policy when you outlive? Why don't you get that back?
Well, you can. There are a couple of policies out there that are designed to get you your money back. However, they're not always the best policies or the best companies to work with, right? So there's a lot of red tape or red letter language that you have to, read through, and that's why it's important to talk to an advisor before you buy it. Don't just go online and purchase it, because chances are there's some language in there that says why you can't receive it, right? But essentially, there are some policies like permanent insurance that you can get that by the time you get to a certain age, you'll have all your money back, right? And you can take it out. You can cancel the policy at that point. But term insurance isn't really that type of deal. They want you to outlive it so that they can keep the money, right? So they're not in favor of returning that money back to you, but there are a few companies, and I can walk people through that. There's maybe like 2 companies that do it, but you got to be careful with that.
It's because some people thought that job was kind of like your car insurance, like all your health insurance. You pay all that money out, and like you don't use it, it's just gone.
Yeah. Well, you just got to be careful, because sometimes if it sounds too good to be true, it is, right? So, and that's what I'm here to help them, because there are some policies, like I said, that do that, but it's not necessarily the best quality or the best company to work with. And eventually, I'll give you an example. I have one client Her mom had passed away. I didn't sell this policy. She got it on her own. I won't name the company, but if you want to ask me offline, we could talk about it. But she passed away. It was $1 million policy. They did not pay the claim. And they said because they found out she was a smoker, which when she applied, she wasn't a smoker, but when she passed away, they did an autopsy, which they have every right to do so. They found out that she lied in the application. She was a smoker. They did not return her money, nor did they pay the policy claim. So it's in the language. It's in the writing. You just have to take a look at it, and you have to know what you're looking for. And that's why I always say, give it to an attorney, give it to somebody that sells it. Don't just go and buy it, or don't just always take the word of the advisor or the person that's selling it to you. Chances are they're making a commission off of it, right? So you just got to be careful with that.
Yeah, that's crazy. That'd be crazy. Wow. Ooh. So let me ask you another question. How does your credit and health determine your rate?
Yeah, so obviously the health is going to determine pretty normally, right? If you're not healthy, you're going to get a higher rated policy. Therefore, you're going to pay higher premiums, or you're just not going to get approved. Your credibility or your credit line does affect insurance, right? And the reason is the insurance companies look at it as risk. So people that tend to have worse credit tend to not take care of their bodies as better as they should, right? So, and the reason is, well, it's a lot cheaper to eat at a fast food restaurant than to go to a Whole Foods, right? So the quality of food that you're ingesting isn't as good. And so that's going to be a risk for the insurance companies to take on you, and they're gonna rate you, and they're gonna make you pay for it on that.
Audience, I hope that nugget hit you hard. Like, if I look at it like you got bad credit, you ain't taking care of your body, and they do go hand in hand. It's like you ain't taking care of your finances, and if you ain't taking care of that, then you most likely ain't taking care of yourself in these other areas, which a lot of times, not in all cases, but in about like 70% of those cases, that is fact.
Exactly. And not every person is equal, right? And so you just got to take that into consideration. And that's why I said the insurance company you work with is a huge part of the process. Some companies will make it very difficult for you to get coverage. That doesn't mean that they're bad companies. That means they're just taking less risk. And that's not technically a bad thing, because think about it this way. Car insurance, right? I have Geico, or I used to have Geico. And during the pandemic, nobody was driving. We all know nobody was out there, right? The roads were empty if you actually were on the roads. Well, when I went to get my policy renewed, Geico said I have to raise your rate in 2020 because of the amount of accidents that are happening right now. And I talked to the salesperson. I'm like, what does that mean? There's nobody on the road. How are you having a higher rate of accidents when there's nobody driving? And what does that have to do with me? I haven't been in an accident my whole life. Insurance companies that make it difficult aren't always the best, but insurance companies that take anybody's money are sometimes worse, because come claim time, that's when they hit you hard, and that's when they make it so that way you don't get what you're supposed to get.
Gotcha. Yeah, that's crazy. Wow. Yeah, them insurance companies, they something else, boy. They something else.
Well, that's why they get a bad reputation, because of things like that happen. And so, again, I can't speak for all advisors out there. Me in particular, I make sure I'm working with the top level companies, because I don't want that to happen. I don't want my client to call me and go, hey, this happened to me, and I have to say, oh, I'm sorry, you're not going to get your money, or you're not getting what you're supposed to get, because I just think it's not fair.
Yeah, that makes sense. Denise said they said this yearly about the car insurance. Yep.
Yeah, they say that quarterly.
Quarterly, yeah. Yeah, that's crazy.
Yeah. I can't believe that, especially in 2020, the pandemic, and it was pretty clear nobody was on the roads. I mean, I drove to work every day, but I lived a block away, and I mean, I got to work with no traffic, nothing. I mean, the lights were just staying green. There's nobody on the roads. And for them to tell me that, I was just like, this is a scam. And so I left. I went to, where did I go after that? Progressive, probably. But, it's just like also, when you're talking to the, what's it called, the internet and cable providers. There's only a few of them, so they can raise their rates. They can change, what they sell you. So it's important to review your insurance, or important to review your finances on a yearly basis, because when things change, you want to be ahead of that, those changes, and you don't want to be the last of the party. Because if you're the last of the party, you're the one that's going to be the sucker at the end, right? So yeah, I'm happy to help if anybody's out there looking to just have a conversation. Simple budgeting plan, simple, looking at all your options. I do review insurance, and I review the things that you have currently. And if this stuff that it's good, I am a fiduciary. If it's working for you, if it doesn't need to be changed, I tell you, keep it. There's no point in, breaking something that's not broken.
Gotcha. There you go. Makes sense. My last question is, what is the best way to deal with life insurance with your loved ones, especially your children? So what would you do about dealing with a trust and doing that for your business and everything like that?
That's a great question. So for your kids, first thing is, one, get insurance on yourself. Okay, whether it's term insurance, permanent insurance, it doesn't matter. Get insurance. Two, get insurance on your kids. It's not for the death benefit, for you to profit. I know that's the first thing that most parents go through in their heads. Like, why would I get, little Susan a policy? I don't expect her to pass away. She's got her whole life. Well, I have 3 kids, and I can tell you I have policies on all 3 of them. Doesn't mean that not anything bad's going to happen, or I want anything bad to happen. The simple fact that I worked in a nonprofit before doing what I'm doing now, and seeing kids with cancer, seeing kids grow up and their health, especially today, diabetes, right? Health is so important to these policies. If you get it now before anything bad happens to them, they're grandfathered in. So nothing that happens in their life will change the fact that that policy they had when they're 2 years old or just born, they can never get rid of it. Okay. And the second thing is, or the third thing I should say, is that because life insurance is protected, right, and it avoids probate, it's the best thing to have as far as legacy planning, right? Nobody's going to be able to dispute that you're giving Susan or Johnny or Karen the money that's in the life insurance. That, the crazy uncle that comes in and goes, hey, that's my money. No, it doesn't. It avoids probate. Nobody can say that they get the money. The only person that has control over that is the owner of the policy, which is you. And so that's why it's important to get those policies for your kids, get them for yourself. Now, you can build it into your business, and like we've been talking about all night, it is a benefit to the business, but it also, like I said earlier, it avoids probate, it's creditor proof, it's judgment proof. And so it insulates your business from lawsuits outside. It insulates your business from, once you liquidate, obviously you can change beneficiaries, but it insulates you from any harm that can be done on the judicial standpoint, right? So nobody can sue you for money that's in these policies.
Yeah. Okay. That sounds good, man. You dropped a lot of nuggets. I didn't really have too much of a follow-up questions for you because you just, I usually like to have a lot of different, questions, but, that's pretty cool. And tell the people how they can find you and get in contact with you if they need some financial advice and insurance and credit card advice and stuff.
Yeah, so easiest way to get me, I give everybody my cell phone, 561-876-7034. You can call me, text me, set up an appointment with me. I don't pass it off to my assistant or to colleagues. Like, you get me directly, so call me directly. I'll set the meeting with you. We'll have a conversation. If I need to bring in another expert, we'll have that conversation then, and I'll introduce you. I don't just pass you off. Or you can email me at Fredrick, Frederick. My last name is Santory, S as in Sam, Antory, at N as in Nancy, M as in Mary.com. So Frederick.Santory@nm.com.
Okay. That sounds good, man. We appreciate you coming on the live, dropping those gems about, financial planning and estate planning and life insurance, and you went into a little bit about trust and stuff. So give us a little bonus. Can you tell people how to pay their credit cards down?
Yeah, so I'll give you a scenario, because this happens. This is part of the process. We talk about this in almost every meeting I sit down with people, because right now everybody has a little bit of credit card debt, or if you have a substantial amount of debt. Let's just assume you have 3 credit cards for this hypothetical, and each credit card has a balance of $10,000, $5,000, and $2,000. The $10,000 credit card has 25%. The $5,000 credit card has 27%, and the $2,000 credit card has 15%. The percentages don't really matter. What matters is the balance. The first thing you want to do is, let's say you know all the minimums payments on each of the cards. Let's just say all the minimums are $200 each to make the math easy. Well, the first thing you're going to do is you're going to put a minimum payment on the $10,000 and the $5,000, and on the $2,000. You're going to pay $200 on each of those cards. The next thing you're going to do is, if you can, whatever dollar amount that you can do, you're going to put the rest on the $2,000 card. So let's just say your budget is, to make the math easy, $1,200, right? You're going to do 200, 200, 200, and then you're going to take the remaining 600 on your balance that you have available to you. You're going to put that on the $2,000 card. So not only did you pay the minimum, you just paid $600 to the principal, right? So therefore, within 3 months, 600, 1,200, 18, all right, 4 months, you're going to pay off that card. Once you pay off that card, this is the trick. The biggest part of this whole thing is, now most people think, oh, I have an extra, $800. I can go spend it on whatever. I can rack up my card again. No, you're going to take your $800. You're going to put it on the $5,000 card after you pay your minimum. You're going to pay off your credit cards in half the amount of time by doing this technique. And you can Google how to do this, because it's pretty simple. Pay the minimums on all the cards. The smallest balance, you're going to pay as much as you can. Usually it's about double of what your minimum payments are to pay off your card. Once you pay off that first card, use that money to pay off the second card and then the third card. It'll take roughly, half the amount of time that it would normally take you if you try to pay them all off at the same time, or pay the one that's bigger the fastest, right? So pay off those cards. That's the quickest way to do it. The second way is, if you can't do it that way because the budget is just not there, talk to a debt consolidator, right? Maybe do a transfer of credit onto a brand new card that has 0 APR. There's a lot of different ways, right? Last resort is file for bankruptcy, right? That's the only other way you can get rid of your debt completely free. It's going to hurt your credit for at least 2 years. But if you're young, if you already have a house, if you already have a business, who cares if it hurts your credit for 2 years? You can get out of that house. But I have a client right now that has about $100,000 in debt. He's like, I'm never going to pay this back because the interest rates are too high. I got him into a debt consolidation program. They said best thing to do is to file for bankruptcy. Take you about 2 to 3 years to build up your credit back up, and that's what he's going to go with. So, sometimes it hurts. You have to hurt before you can heal, right? So that's a couple different ways we can do it, and not every way is even, right? So have a conversation with me, and we can kind of work it out from there.
All right, that sounds good. What about the Law of 72?
Law of 72? Yeah, I mean, the issue with these laws and these rules that everyone reads about is that you got to be disciplined, right? And that's the biggest thing. Like, it doesn't matter if it's 72, 64, 35, right? It's all about discipline. And the problem is, just like a diet, or just like you have a weight loss goal, what's the biggest thing that happens come February 1st if you're working out? Nobody goes to the gym anymore, right? So that's the issue with these laws of 72 and these rules that you can follow, right? So the plans that I just created or just talked about, there is a discipline there, but there's also a way to kind of let yourself off the hook a little bit. It's kind of like a cheat day. Oh, this month I can't pay off the minimum on my car, or I can't pay extra on my car. I can only do the minimums, right? You have to at least do the minimums, right? It's still a discipline, but yes, essentially, any of those programs that you've heard of or you've seen on TikTok or you've read up on Google or whatever, they all work, but they only work if you stick to it.
All right, people, we said discipline. So anything you're doing, building credit is discipline. Having everything, your health is discipline. Everything is discipline. It means in doing something consistently over time.
Yeah.
Okay? So
eat your vegetables.
Eat your vegetables. Take care of yourself. Yearly checkups, semi-yearly checkups. Take care of yourself. If you want to reach out to Mr. Santory, reach out to me. I'll give you his contact information, and we'll go from there. Thank you, Mr. Santory, for coming on as live. You dropped some gems. I hope this was a blessing to you. Next week, we're going to have another phenomenal guest. As I say at every podcast, you don't know which angle we're coming from. Till next week, we'll see you soon. Thank you, Mr. Santory. I appreciate you.
Yeah, have a good night, everybody. Get your sweatshirts, get your hoodies, get your socks.
Yeah, get all of that. Go ahead, www.royalblossomcommunity.co. So you want to go ahead, get this in, man. Get your jackets in, man. You know, we all one, baby. Go ahead and get your jackets in.